Hello students, in present video I am going to explain about 10th problem from bills of exchange topic. I am taking this question from Financial Accounting 2 subject, BCom first year semester 2 Pankaj publications book. Previous videos links are available in the description box. Let us see the question first. 10th problem, P draws a bill on Q for 600 rupees. Q accepts the same. P endorses the bill to R and R to T. T discounts the bill for 575 rupees. On the due date, the bill is dishonored. Show the journal entries in the books of all the parties. This is the question. Let us see the solution for this. Let us understand the question first. P prepared a bill for 600 rupees on Q and received acceptance from Q. So for this bill, P is called drawer, Q is called drawee. Dates are not available. P endorsed this bill to R. P has to pay 600 rupees to R. So in full settlement, this bill P is transferring to R. R endorsed this bill to T because R has to pay 600 rupees to T. In full settlement, R has given this bill to T. T discounted this bill with a bank. Before the due date of the bill only, T needs money. So he sold that bill to bank for 575 rupees. Finally, on the due date, bank went to Q and Q dishonored the bill. Q failed to pay this bill amount 600 rupees. So this is the question. And what is asking us to prepare? Journal in the books of all these parties. So first, we prepare journal of P. Heading, journal of P. In brackets, mention that he is a drawer. Date, particulars, LF number, debit, credit. Now we have to analyze all the transactions from P's point of view. Because in P's books we are writing journal entries. We are an accountant of P now. So first what happened? P received acceptance from Q on 600 worth bill. Question is, why Q is giving acceptance on this bill? Because Q has to pay 600 rupees to P. Why Q has to pay? Because once what happened? P sold goods to Q on credit for 600 rupees. So first for that sales we have to think the journal entry. Sold goods to Q 600 rupees. Entry is Q account debtor to sales account 600 rupees. Why Q account is debited? Q account is a personal account. Personal account rule, debit the receiver, credit the giver. So P is giving goods to Q. Q is a receiver. Therefore Q account is debited. Why sales account is created? So P is giving goods to Q. From P, goods are going. Goods account is a real account. Real account rule. Debit what comes in, credit what goes out. Goods are going now, we have to credit goods account. Instead of writing goods word, transaction name, sales, we wrote. Now what is the effect of this entry on balance sheet of P? Personal account is debited. Means that person is a debtor. Because debtor is an asset we have to debit. So asset debtor account is created here with 600 rupees. Now what happened? On this person Q, we wrote a bill and we received acceptance. So what happened here? Debtor asset is converted into another asset known as bills receivable. So debtor asset we have to cancel, a new asset bills receivable we have to create. How we created debtor asset account? By debiting Q account. How to cancel? By crediting. You have to credit Q account with same amount 600 rupees. A new asset bills receivable we have to create now. Asset shows a debit balance. If you want to create any asset account, we have to debit. So bills receivable account I want to create now. Debit that account name. Bills receivable account debtor. Amount same 600. Dates are not available in the question now. In date column, instead of writing dates, simply write the serial numbers. Journal of P. In brackets mention that P is a drawer. Date, particulars, LF number, debit, credit. First entry, bills receivable account debtor to Q account 600. Being acceptance is received. Next entry is for endorsement. P is endorsing bill to R. For that endorsement, we have to write the second entry. To understand this entry, first we should see why P is giving 600 worth bill to R. Because P has to pay 600 rupees to R. Why? Once from R, P purchased goods on credit. Purchase value 600. So for purchases, what is the journal entry in P's books? Purchases account debtor to R account. Amount 600 rupees. When we are buying goods, to us, goods are coming. Goods account is a real account rule, debit what comes in, credit what goes out. Goods are coming now, therefore goods account we should debit. Instead of writing goods name, write purchases account, transaction name. Why R account is created? R is giving goods to us. R is a giver. As per personal account rule, credit the giver is applicable. Therefore, R account is created. Now come to endorsement entry. So in full settlement, we are giving this bill to R. What is the effect of this entry on balance sheet? R account is created. When any personal account is created, then the meaning is that person is a creditor. It is a liability. So liability side, creditor, 600 is appearing. Now come to endorsement entry. We are endorsing 600 worth bill to R. So when we give that bill to R, now R is not a creditor to us. Therefore, creditor account will get cancelled. How we are creating this creditor account? By crediting R account. How to cancel that? By debiting. R account we should debit. Amount 600. 2. We are giving our bill to R. So after this settlement, with us that bills receivable will not be there. In balance sheet we are showing that we have one asset with 600 rupees. Now this asset will get cancelled because we are giving this asset to R. Bills receivable account we have to cancel. How we created this? By debiting. How to cancel? By crediting. Credit bills receivable account. Amount same, 600. Entry number 2. Second entry, R account debtor to bills receivable account 600, being bill is endorsed. Next what happened? R discounted the bill with T. Transaction is between R and T. In P's books, we need not write any entry. Next what happened? T discounted that bill with bank. Transaction is between T and bank. In P books, we need not write any entry. Next what happened? On the due date of this bill, bank went to Q. Q dishonored the bill. Then bank comes to T and demands for this money. T goes to R and demands for this amount. R comes to P and demands for that amount. Now we are in P books now. So what we should do? To R, we have to pay 600 rupees again because Q dishonored this bill. So to P, R is becoming a creditor. Creditor is a liability, we should credit that. Therefore, R account we should credit with a 600 rupees. A new liability, creditor, is created with a 600 rupees. Next what happened? We demand this 600 from Q now. So to us, again Q is becoming a debtor. Debtor is an asset, we should debit. Therefore, Q account we have to debit with the same amount, 600 rupees. Serial number 3. So a new asset, debtor, is created with 600 rupees. Third entry, Q account debtor to R account 600, being bill is dishonored. With this, P's journal is completed. Next, journal of Q. Now come to journal of Q. In brackets mention that drawee. First what happened? We are giving acceptance to P on 600 worth bill. Why we are giving acceptance to P? Because we have to pay 600 rupees to P. So why we have to pay? Because once we purchased goods from P on credit. Purchase amount 600. Now we are preparing journal of Q now. Think from Q's point of view. So transaction is purchased goods from P 600 rupees. Entry is purchases account debtor to P account. Amount 600 rupees. What is the effect of this entry on Q's balance sheet? In balance sheet, P's account we are crediting, no? Credit means he is a creditor. Liability side, creditor 600 APS. Now what happened? For this 600 rupee, P prepaid a bill and we are giving acceptance. So this creditor liability is converted into another liability known as bills payable. Creditor liability we have to cancel. A new liability known as bills payable we have to create in that place. How to cancel creditor liability? By crediting we have created. To cancel we have to debit P account. P account data. Amount same 600. 2. A new liability known as bills payable we are creating. So liability shows a credit balance. No? If you want to create any liability, you have to credit that. Therefore, bills payable account we have to credit. To bills payable account. Journal of Q. Drawing. First entry, P account data to bills payable account 600. Being acceptance is given. Next entry is for what? P is endorsing bill to R. For that in Q's books there is no entry because he is not affected there. Next, R endorsed bill to T. For this endorsement also in Q's books no entry. Next, T discounted that bill with the bank. For this discount in Q's books there is no entry. Finally, bank came to Q and Q dishonored the bill. So Q is only dishonoring the bill. No? Therefore, in Q's books, for dishonor, we have to write the journal entry. What happens? In books, we wrote that one liability we have, bills payable. Now we are dishonoring this liability. Means that the liability will get cancelled. Bills payable will get cancelled. How we created this liability? Bills payable by crediting. How to cancel? By debiting. Bills payable account we have to debit. Bills payable account data. 2. Which account we should credit? Bank came to us. We dishonored the bill. Then bank goes to T. T goes to R. R goes to P. P comes to us only. No? Finally, Q has to pay 600 rupees to P again. So to Q, P is again becoming a creditor. So creditor is a liability. Liability shows a credit balance, no? Means P account we have to credit. Amount same 600. For these two entries, write the serial numbers. And what is the effect of this entry on balance sheet? A new liability, creditor, is created with a 600 rupees. So bills payable liability is converted into creditor liability. Second entry, bills payable account data to P account 600. Being bill is dishonored. With this, Q's journal is completed. Next, journal of R. Journal of R and RC. Now think from R's point of view. First, what happened? P received acceptance from Q on a bill. Transaction is between P and Q. R is not affected. For this acceptance, no entry in R's books. Next, what happened? From P, endorsement is coming. For this, we have to write the journal entry. Why P is giving this bill to us? Because P has to pay 600 rupees to us. Why P has to pay 600? Because once we sold goods to P on credit. For sales, what is the entry? P account data to sales account. Amount 600 rupees. P account is debited because R is giving goods to P. So P is a receiver. Personal account rule, debit the receiver is applicable here. Why sales account is created? From our goods are going. Goods account, real account. Real account rule, debit what comes in, credit what goes out. Goods are going now. So instead of crediting goods word, we credit sales word. As per this entry, P account is debited. When any personal account is debited, then the meaning is that person is a debtor. So debtor is an asset. Asset side, debtor 600 is appearing. Now come to this endorsement entry. From P, for this due amount 600, a bill is coming. So to endorse also, a bill is bills receivable. Because on that bill in future, endorse will receive the money. No? So bills receivable asset is coming from P. Same asset, debtor, is converted into another asset known as bills receivable. So debtor asset we have to cancel, a new asset bills receivable we have to create. How to cancel debtor asset? By debiting P account we have created debtor asset. To cancel we have to credit P account. To P account. Amount same 600. Then a new asset bills receivable we have to create, no? Asset shows a debit balance. If you want to create any asset account, you have to debit. Bills receivable account we have to debit with the same amount 600. Journal of R and RC. First entry, bills receivable account debtor to P account 600. Being endorsement is received. Next entry is for endorsing the bill to T. R is giving 600 rupees worth bill to T. Why? Because R is liable to T. R has to pay 600 rupees to T. Why? Because once from T, R purchased goods on credit. Purchase amount 600. So in our books, for that purchases, what is the journal entry? Purchases account debtor to T account. Amount 600. So why purchases account is debited? Why T account is credited? Previously I have explained, no? So personal account is credited. Means that person is a creditor. It is a liability. In balance sheet of R, creditor 600 is appearing on liability side. Now what R is doing? He has to pay 600 rupees, no? With him, this bill is there, no? That bill he is giving to T. So when he gives that bill in our books, we have to cancel bills receivable because now bills receivable is not there, and we have to cancel creditor also. Now T loan is cleared, no? So bills receivable asset we have to cancel, creditor liability also we have to cancel. How we created bills receivable asset? By debiting. How to cancel? By crediting to bills receivable account. Similarly, how we created T creditor liability? By crediting. How to cancel? By debiting. T account we should debit. Amount 600. Second entry, T account debtor to bills receivable account 600. Being bill is endorsed to T. Next entry is for T discounted that bill with bank. Transaction is between T and bank. R is not affected. No entry in R's books. Next, what happened? On the due date, bank went to Q. Q dishonored the bill. If Q honors the bill, then bank doesn't come to T. T doesn't come to R. So no entry for honor. But now bill is dishonored, no? Then bank demands that money again from T. Again T demands that money from R only, no? Now we are preparing journal of R. So to R, again T is becoming a creditor because R has to pay the money, no? So creditor is a liability, we have to credit liability. Therefore, T account we have to credit. And we demand that 600 from P only, no? So to R, again P is becoming a debtor for 600. So debtor is an asset, we have to debit. P account we have to debit. Amount same. So what is the effect of this entry? In R's balance sheet, again debtor is created with 600 rupees. Creditor is created with 600 rupees. Third entry, P account debtor to T account 600. Being bill is dishonored. With this, journal of R is completed. Now come to journal of T. Journal of T. He is also an endorser, no? Now think from T's point of view. First, what happened? P received acceptance from Q. For that acceptance in T's books, there is no journal entry because T is not affected here. Next, what happened? P endorsed that bill to R. For that also in T's books, no entry. Next, what happened? From R, endorsement is coming. For that, we have to write the journal entry in T's books because T is only receiving that endorsement now. So why R is giving 600 rupees to us? Because once we sold goods to R on credit. So transaction is sold goods to R 600 rupees. Entry is R account debtor to sales account 600 rupees. You know the reasons why R account is debited, why sales account is created. Again and again I need not to explain. So what is the effect of this entry on T's balance sheet? A personal account R is debited, no? Means that person is a debtor. R is a debtor for 600 rupees. Asset side debtors 600 appears. Now come to endorsement entry. From R 600 worth the bill is coming. When that bill is coming, this R account will get closed, no? So debtor account we have to cancel. How we have created? By debiting R account. How to cancel? By crediting to R account. Same debtor asset is converted into another asset known as bills receivable. I told no, for NRC, bill is bills receivable. Like R to T also, this bill is bills receivable. So a new asset known as bills receivable is created now. So how to create any asset account? By debiting. Therefore, bills receivable account we have to debit. Journal of T, NRC. First entry, bills receivable account debtor to R account 600. Being endorsement is received. Next entry is for what? T is discounting this bill with the bank. So T needs this money before the due date. Therefore, after receiving the acceptance, immediately P sold this bill to bank for 575 rupees. So P is losing 25 rupees. For P, this is a loss known as discount. Discounting the bill means selling the bill to bank before the due date of the bill. When T is selling this bill to bank, now with T, bill is not there. In balance sheet, bills receivable asset we have to cancel because he sold that bill to bank. So how we created bills receivable asset? By debiting. How to cancel? By crediting. Credit bills receivable account with 600 rupees. Because we have created bills receivable account with 600 only. Next, bank deposits 575 rupees in our account. So our bank balance is increased with 575 rupees. Bank. So we have to create a new asset, bank. So bank account is a personal account. Personal account rule, debit the receiver, credit the giver. Bank is depositing that money in our account. Bank is a receiver for 575 rupees. Therefore, debit a bank account with 575 rupees. Instead of debiting bank account, you can debit a cash account also. Both are correct. So bank account if you debit, then the meaning is bank is depositing that 575 in our account. If you debit cash account, then the meaning is bank is directly giving 575 to us. Both are correct. Next, we are losing 25 rupees now. Instead of receiving 600 from bank, only 575 is coming. So that 25 rupee is a loss known as discount allowed. So discount allowed account is a nominal account because expenses, losses, incomes, gains come under nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Discount allowed loss we have to debit. Discount allowed account data. In debit column, discount amount 25 rupees. Instead of debiting discount allowed, you can debit discount account. Both are correct. Second entry, bank account data 575, discount allowed account data 25, to bills receivable account 600. Being bill is discounted. Next, what happened? We sold bill to bank now. On the due date, bank went to Q. If Q honors the bill, then okay, no problem. For that honor in T's books, we need not write any entry. But Q dishonored the bill. Then again bank comes to T only. Bank demands for that 600 rupees. Now we are in T's books now. To T, again bank is becoming a creditor. So T has to pay 600 rupees to bank now. Creditor is a liability. We have to credit liability now. Credit bank account to bank account. T has to pay 600 rupees again. Next, which account we should debit? We demand that 600 from R only, no? Because R only has given this bill to us. So to us, R is becoming a debtor for 600. Debtor is an asset, we have to debit that asset. Therefore, R account we have to debit. Amount same, 600. What is the effect of this entry on balance sheet? A creditor is created with 600 rupees. Next, again a debtor is created for 600 rupees. Third entry, R account debtor to bank account 600. Being bill is dishonored. With this, T's journal is completed. In question, he is asking us to show the journal entries in all parties' books now. So we prepared P, Q, R, T's journals, but not a bank journal. So in bank books, we need not to write the journal entries. Writing journal entries in bank books is not our bills of exchange related topic. So bank accounts is a separate topic. Therefore, we need not to prepare journal of bank here. Take a screenshot of journal. This is the end of present video. Hope this video is helpful to you. Thank you.